In today's video, we're talking about how you can start investing using little money. I'm going to do a review of the Raise investment app. Hi everyone and welcome to this video. For those of you that don't know me, I am Angela, your money messenger. My background is in financial planning. I've got 20 years experience in that industry. I help financial advisors to put together recommendations for their clients about how to repay debt, save money, invest, and insure themselves correctly. So I'm imparting some of my knowledge about that to you through the money messenger. So let's talk about the Raise investment app and how you can get started investing today with little money. First of all, let me just say, I love the Raise investment app. Number one, I think it's fantastic. I have been using it myself for over 3.5 years now. It used to be called Acorns. It's been around for a little while under that name, but when they branched out in Australia here, they separated from the parent company and they did a rebranding. So they've called themselves Raise, R-A-I-Z. So there's a few different ways that you can invest in the Raise app. You can invest a lump sum. So if you had $100, if you had $10,000, you could just whack that into it straight away. That's not the best way of investing because you're going in at one price in the market. So then if the market dips tomorrow, then you could have lost a little bit of money. If the market rises tomorrow, you could have made more money. But the way of investing successfully over time is to add a little bit amount to your portfolio over a long period of time. That's the safest way, that is the most unnoticeable way, and that's the way to really get ahead. So with Raise, I want you to ignore the lump sum investment for now. Put that to the side. Also, the point of this video is that people want to get started with investing. So you may not necessarily have 5 or 10 grand to invest. The beauty with the Raise app, the one thing I absolutely love about this app compared to any other micro investing app that is available here in Australia, is a feature called roundups. So with Raise, their motto is to invest your spare change. That means if you go and buy a coffee, for example, for $3.50, let's just say, the Raise app will round up that purchase to the nearest whole dollar. So $4. It will take that extra money, the 50 cents, and invest it into your portfolio. Now, in my 20-year career in financial planning, I have never seen another product that can do that. There are different apps now popping up, different bank accounts through regular banks, which have roundup features for savings accounts, which is great. But never have I seen something that would invest this money into the share market for you. Usually that is completely inaccessible for people because it's impossible to invest in the share market using little amounts because the brokerage fees would usually eat them up. So with Raise, the most outstanding feature of that is the roundup feature. It's the only micro investing app that I've seen in Australia that offers that, and it will change the game when it comes to investing for you. The way it works is you link your different bank accounts to the app, whichever accounts you use regularly for your transactions. The more transactions you have coming out of it, the more roundups will occur. So for me, I've attached a couple of my different bank accounts that I use regularly for expenses, plus also a credit card that I use all the time for my expenses. So every time I make a purchase of anything, it's rounding it up to the nearest dollar, clumping all those little small bits and pieces together, and then once or twice a month it takes money out of my nominated bank account to invest into my portfolio. Raise is very smart. It will round up money from bank accounts and credit cards, but you then nominate one bank account for it to actually take the cash out of. So it won't take cash from a credit card, which is a no-go zone because of fees and whatnot. So Raise is very smart like that. You nominate several different bank accounts that you want to do the roundups from, but you nominate one as your funding account for them to take the money from. Also with Raise, you can nominate to save an additional amount per month if you like. It could be $5, could be $50, could be $100, whatever. That feature should always be added as well because it's a savings plan. The roundups is amazing to get started, but if you really want to grow your wealth quickly, you're going to need to do a little bit more than the roundups. The roundups are there so that you don't even notice the money coming out of your bank account. But if you want to enhance your portfolio and really grow your wealth and your savings, I really recommend adding an extra amount to your portfolio. So for me, like I said, I've been doing this now for 3.5 years with the Raise app. I do my roundups, which with all my expenses and whatnot during a month, usually equates to about $40 a month they take from my bank account. And I've also been putting in $200 a month, which is about $50 a week, religiously for 3.5 years. So what does Raise do with your money? It invests in portfolios of exchange-traded funds, ETFs as they're known, and they're essentially a group of shares that the fund manager puts together for you to invest in. You can go and buy the same ETFs on the ASX directly for yourself using a CommSec account or a NabTrade account, for example. But with Raise, the point is that you're investing into these ETFs without doing it directly onto the share market yourself. That's how you save so much on brokerage fees, because Raise will clump all your money together with other people and do bulk purchases. In the Raise app, there are 7 portfolios for you to choose one. They range from the conservative all the way up to the aggressive portfolio. Plus, there's also an ethical portfolio and also a new portfolio called Sapphire that's come out, which has some Bitcoin exposure. So which portfolio should you pick? Depends on your time frame. If you're risk adverse, which means you're not really too comfortable with share market fluctuations too much, then you want to head down towards the conservative or the moderately conservative portfolio. If you've only got 2 or 3 years that you want to be investing for, go shorter term, go shorter risk. However, if you're investing for long term, which means 5 or 7 years or more, then you might want to go the aggressive portfolio. The difference is the more aggressive the portfolio, the more exposure to shares. So, for example, the aggressive portfolio has 90% exposure to shares, whereas the conservative portfolio has only 23% exposure to shares, 23%. So, depending on how long you're going to invest as to what portfolio you want to choose. When it comes to investing, this is long term. So several years you need to be invested. If you pick the aggressive portfolio, that means that you've got more share exposure, you've got more fluctuations on a day-to-day basis, which means you need to keep the investment for the long term. Long term means 5 years, 7 years or more. So this is not a short term, I want to save for a holiday, I'm going to open up a Raise account for that. This is for your long-term investing. To get started with long-term investing, use a regular bank account or a high-interest bank account for any short-term savings, like any tech gadgets you want to buy or holidays or whatnot. But a Raise app or any type of investing is more for your long-term investing. So anything that you have several years before you want to touch the money. Let's talk fees. In any investing, there are fees attached. Usually there's an administration fee, there could be brokerage fees, there could be an investment management fee, which is the fee for the investment manager to manage the portfolio, to buy and trade and sell on your behalf. Now with Raise, if you have a portfolio of under $10,000, which most people will when they're just starting out, the fees are $2.50 per month, $30. Plus also an investment fee, depending on which portfolio you pick. So those fees are either 0.196% for the conservative, or they go right up to 0.418%, which is moderate in the scheme of things when you compare different managed investments that are available. Once your portfolio grows to over $10,000, that $2.50 administration fee disappears and it's replaced with a 0.275% admin fee. Again, compared to what it's offering, those features as to other investments that are available into the market, these fees are very, very reasonable. So remember, when you're comparing different investment apps that are now available, Raise was one of the first, but now there are several other ones, none that I've seen with a roundups feature. Don't just compare the fees, compare what actual features you're getting. So I just want to show you the Raise app in real life. I've been using it for 3.5 years, like I said. I started with $0 in there and now it's grown to a whopping $11,500 after 3.5 years of savings. So with your phone, you download the app. Now I'm literally going to log into mine to show you my current portfolio so you can see. So there's an amount there of $11,499 today. Now, if I click on the past up in the app, it will show you exactly how much money I've put in there and how much money I have made. So you can see for yourself. I have invested myself $10,588 over 3.5 years. I've made market gains of about $800, which includes some dividends, and I've also got about $100 of different rewards in there. I'm going to tell you what the rewards are in just a moment. You can see there that the money goes in regularly throughout the month. It might be dividends that I've earned, it might be amounts going in. You can see my $200 there, different little roundups as well that have gone in there. You can see that there's an amount of $41.32. That's the roundups going out of my bank account. So the roundups won't come out of your bank account every time you spend money, 50 cents, 50 cents, 50 cents. Raise will clump them together and usually take them out once or twice a month from your nominated funding account. When you get started in investing, you need to have a long-term mentality, because if you only do this for a year or so, or even a few months or less, you're going to find there's volatility in the market. And if you put money in and then take it out at a short-term notice, you could find that the market has actually dipped. So the money you want to take out is less than what you've put in, so you lose money. Investing is a long-term game. So you can see here's my returns over the 3.5 years that I have been investing using this app. So see how it's like a staircase going up? The last few years we've had a bull market essentially in Australia, which means it's been going up. So it's been hard to lose money on the share market, but the staircasing is what you can see the amounts going up over time. Had I invested in only for a short-term time, so say I only opened up this 6 months ago, you can see that the staircasing, the fluctuations in market are greater over a shorter period than what they were over a longer period. So it all evens out in the end if you give it time, long-term time for investing. As an example, you can see there just recently in March, we had a big market downturn. You know, when COVID struck, markets dipped 30% in some cases. So as a lesson as to how it is important to do long-term investing, had I invested before COVID, which I did, had I pulled it out when markets had dipped, my portfolio, which is worth $11,500 today, when COVID struck and markets dropped 30%, my portfolio dipped down to just under $8,000. Now, that was also back in March, 6 months ago, so I had put less money into it, obviously. My monthly amounts and my roundups have continued. But had I taken out that money at the time, had I panicked and gone, oh my God, I want to take out my money, markets have dropped 30%, take my money before it drops more, I would have taken out the portfolio, which was about $8,000 worth. However, since then, which is only 6 months later, markets have recovered quite some. So that $8,000 is now worth $11,500. So you can see that difference there of over $2,000, $2,500. Had I panicked and taken out my money, I would have missed out on those market returns with the markets recovering. So it's really important to, when you get started investing, have a long-term mentality, a little bit over a long time, 5, 6, 7 years plus, and forget about it. Set it and forget about it. Don't watch it. Don't worry about the share market so much. So as an overall review of the Raise app, the benefits are, number one, you can get started with investing with little knowledge. You don't need to pick the ETFs yourself. The fund manager will do it for you. All you need to do is select the portfolio you want based on the time frame of your investing. Number two is you can get started investing with little money. The roundups, as I've mentioned, they are the superstar of this app. Never in my financial planning career have I seen another investment product that will allow you to invest small amounts of money into the share market without paying brokerage fees like that. So it's a wonderful way, I think, to get started without you even noticing the money coming out of your bank account. The roundups are the superstar. You could also invest a monthly amount, whether it be $10, $50, $100, whatever. It's an awesome way to excel your portfolio and grow your wealth, doing it via a savings plan. The roundups is one thing, but they're going to be relatively small amounts of money. Remember, investing your spare change. Adding a monthly amount is the way to go. The fees, I think, are very reasonable for what features you're getting. For the roundup feature and being able to add in the savings plan, I think the Raise fees are extremely fair. If you start the portfolio and you only have $100 in there or $1,000 and you leave it, you stop doing it, well, maybe you could do it cheaper some other way. You don't have to pay that $2.50 per month fee. But the idea with this is that you keep going for several years. Don't stop just when you get to a few $100s and cash it out. Don't stop when you get to $1,000 and cash it out. These are long-term portfolios to grow your wealth, to start investing. So you really, ideally, should be doing this for about 5 years or more. Another huge benefit of Raise is a rewards feature. There are several products and apps now available that when you're shopping online or your bits and pieces, you know, you get some rewards back, some cash back. Raise has a feature which is called the Raise Rewards. Now, every time you shop online, if you do it through your Raise app, you can do it through your mobile, or you can also log on onto your computer and do it that way. If you're going to be shopping online anyway, you might as well do it through your app and get a cashback from the different retail providers that are on there. Now, these are not no-name brands either. You've got Dan Murphy's on there, you've got The Iconic is on there, Myers is on there. There's a whole bunch of different companies. Even airlines are on there. I've booked tickets through them and gotten some money back as well. So whenever I'm shopping online, I always check first if the shop is available, the retailer, through the Raise app. And if it is, I definitely put the order through Raise. The prices don't change, but you do get a few cents, a few dollars back into your account, and it all adds up over time. What about the risks? The risks are you are investing. Number one, that's not a risk of Raise as such, it's just a risk with investing. With share markets, they do go up and down, they fluctuate. You can't control that. That's why we say that long-term investing is a safety net so that you can ride out those fluctuations. Another downside is that you don't get to choose the ETFs that you invest in. You know, you can go online and do this yourself and actually be in control of what investments you pick. However, the point of this Raise app is to get you started with investing. So if you're just starting, most people don't have the time or knowledge to want to bother about picking their own investments. So you don't need to worry about that. That's not the point. If you want to do it yourself, open up your own online trading account, CommSec, NabTrade, whatnot, and do it that way. So if you want to get started with investing with little money, check out a micro investing app. There are several of them available now in the marketplace. I'm going to do a video to review those and compare them. But this video, we talked about the Raise investment app and why I think it's the superstar because of those roundups. If you want to start a portfolio, you might as well do it with some free money. So I've left a referral code in the comments box below. Use that and you'll get 10 bucks popped into your account. Please don't forget to give this video a thumbs up. And if you like what you saw today, subscribe so that you never miss out on a video. Thanks for watching. I hope you got some value and I'll see you in the next video. Bye.